Hello and welcome to another update video about HBAR. On the HBAR chart, we finally start to see some upside here in this potential D wave. We saw it already in the last video yesterday that there was some short-term upside that started from down here. First, we were watching for one more low on the micro level. That one more low happened. Now, that being said, this is not entirely predictive, not within a sideways range, but what we saw was that the market got rejected there at our resistance level, formed that one more low. That gave it a very, very full 5-wave move to the downside here in a C wave. And that was the C wave of a larger A, B, C structure in wave C of the triangle. Let me take you through the microstructures within our triangle pattern here that we're tracking. Because HBAR is, structure is quite, I don't want to say easy to read. It's always challenging in corrective sideways ranges. And this is clearly a sideways range, right? But because the market is forming higher lows and lower highs, you see that here all these lows are higher lows and lower highs. I think that's very clear. We have a potential triangle pattern, right? As long as this continues, this could develop a little further sideways before we have a completion of the triangle. From an Elliott wave point of view, triangles are 5-wave patterns, but sideways in corrections. So what I need to see is an A wave, a B wave, a C wave. Okay, so that's what could be playing out now. Next would be a D wave, which I assume is currently unfolding, and then an E wave that would be the higher low. And that would be a completed Elliott wave triangle labeled A, B, C, D, E. And then the E wave should be a higher low and lead to an upside breakout. I mean, that would be ideal. That would be ideal. Does it need that E wave, or could it break out directly? It can always break out directly. It would then not be a triangle. It would be something different, or I don't know. We would have to look at this. But for now, I mean, I'm leaning towards upside as long as we are above support. But obviously, a triangle is not without reason called a pattern of indecision, right? Because the market doesn't know itself. So, I mean, I'm simply going with the trend here. But there are two bullish scenarios still here that could play out. First of all, it's either the direct move up after the triangle completes and then move up, or a dip into the lower support region that starts at 16.7 cents and then a move to the upside. So I'm tracking two potential bullish scenarios here on the chart. One is more directly aggressively bullish than the other one. But as long as we're holding above, especially the red line, which is located around 23.5 cents, direct movement to the upside is preferred. And if I'm zooming in a little bit further, let's do that, then we can see that the DE pattern seems to be outstanding still. And this here might be the A wave, which could be in the late stages, then a B wave pullback and a C wave up in wave D, and then another ABC in wave E. That's what XRP did, but XRP hasn't really broken out impulsively yet. And then we could move up. Right? It's just important to stay above the red line to keep that potential valid. In the short term, it would actually be now important, and I will remove the micro count here to keep it clean here. 1 second, not that one. The previous one we don't need anymore. It is important in the short term to even stay above this level at 25 cents, because any break below that level would at least invalidate the microstructure, because an E wave of the triangle must not break below the low of the C wave. Okay, so that's just, it's essentially quite simple. It's just a higher low and a lower high that we need to form, right? So we can't break below the previous swing low. Well, it can, but it would require a reinterpretation of the chart. So this seems to be the roadmap that's being followed. So what we can do as well is add, I talked about in the last video, that we might want to add support for a B wave pullback. Again, also here, this is the micro count, and that B wave support area I've just added is subject to change, because if the A wave extends a little higher, which it could do, then that support area will change as well. At the moment, micro support is between 25.8 cents and 27.5 cents. And the A wave, I mean, if it stretches higher, next structural resistance is around 29.6 cents and 30.1 cents. So this is all you need to know. The only other thing is, for a D wave, an ideal target is the 61.8 extension. So we'll see if the market reacts to one of these next fib levels. 61.8 extension is at 31.5 cents. And then we've got 33.5 cents as well as an additional level to watch there. So let's see. I mean, overall, the pattern is just grinding sideways. I know it's not very exciting, but it's all looking okay. I mean, it's just a triangle. I know these take time and it takes some patience, right? But that's what these wave fours often are like. So that's the update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.